When I asked Neil Frenneman to speak on gold and the World Gold Council, he said, no, I'm the wrong guy. Here's the right guy. So thank you for joining us. I know it was at reasonably short notice.
That's very good.
Come and tell us, why is the World Gold Council not just the executive travel club for mining?
I heard that, yeah. I heard that once before.
Welcome, anyway.
Thank you very much. Good afternoon. Thank you for the invitation to speak here this afternoon. And this is my first time at the London Mining Indaba. For those who don't know me, before taking the role as CEO of the World Gold Council, I spent 35 years in investment banking and hedge funds. During my last 5 years at Credit Suisse, I ran the firm's global macro division, which was all the interest rate trading, FX, commodities, and electronic trading. But most significantly, and the point of this speech really, is I was the person who also shut down commodities trading globally at Credit Suisse, which obviously included precious metals and gold. Why did I do that? Because it was simply too difficult, risky, and expensive from a return on capital perspective to be involved with. But at the time, it wasn't my job to figure out why it was difficult, risky, and expensive. I simply saved myself $500 million and improved my ROC just by closing the operation. However, and somewhat ironically, obviously, it is now my job and the job of the WGC to figure out just why. And so with this in mind, when I joined the WGC, I recognized 4 major issues, all of which boiled down to trust. First, I recognized a huge lack of trust in gold at both the retail and institutional level. For instance, we know that approximately 50% of people don't trust gold, which has led to warnings not to buy the products from some regulators, including ours in the UK. Today's investors and consumers demand transparency and integrity and want to know for certain that products have been responsibly sourced and produced. And so I asked myself, where could I go to check the integrity of a product? Second, it was clear that 60% of people literally don't understand gold, its market, or how to safely access or invest in the asset, again leading to warnings not to buy the product from some regulators. I was left asking, where do I go to learn about and safely access this product 24/7? Third, I recognized a confusing product, a highly fragmented global gold market. I've previously likened the market to medieval England, with various kings and fiefdoms ruling over their own patch, mostly working together, albeit in a haphazard and somewhat inefficient manner. I asked myself, why is gold the product not globally standardized? And why is the gold market not joined up and fungible, hence much more attractive to global investors and asset managers? And finally, there appeared to me to be a lack of global governance and regulatory oversight. There appeared to be no overarching entity or body drawn from the entire supply chain working for and on behalf of the industry. And so I asked, who's got responsibility for the industry's future? Has its development been just little more than Darwinism? And so in that context, the WGC set out to solve for integrity, accessibility, and fungibility of gold and the gold markets, known as our project Gold 247, a digital transformation initiative designed to instill trust and transparency in gold and its market, and hence lower the capital costs to entry from the world's investors. So firstly, to address gold bar integrity, the LBMA and WGC have partnered to develop and implement an international system of gold bar integrity, known as the GBI program. GBI aims to put all legitimate gold onto an immutable blockchain-based database where buyers will be able to clearly see that the investment bar, coin, and when technology allows jewelry they purchase was sourced responsibly, refined reputably, and has only passed through the hands of legitimate actors. We are working with a Swiss technology company called Z.B.S to develop this database and have, alongside the LBMA, already made considerable progress. Indeed, The LBMA has made exceptional progress in this regard, bringing, at the last count, 93 of 107 of their good delivery list refiners onto the system in very short order. In addition, all 33 WGC member LSM companies are in the process of adopting the database, and together with declaring the refining partners, will be uploading all newly refined production going forward, allowing for a transparent miner-refiner handshake, which will enhance investor confidence in the immutability of the gold supply chain. I'm pleased to say that Sibanye-Stillwater and the Rand Refinery are leading the way with this supply chain handshake and are setting the example for the rest of the industry to follow. This is an ambitious but necessary goal because, as regulatory regimes tighten and investors rightly become more discerning, we must move our industry towards total trust and transparency in order to compete for capital against other simpler, transparent, and trusted asset classes. I'm confident that the day will one day come when it will be unthinkable to buy gold without first checking its origin and integrity in the GBI database. My goal is that if you are holding gold for nefarious reasons outside the database, you will find the available buyers for your gold start to decline and the market for your gold gradually sink. Adoption of this database is the critical foundation for more accessible and fungible market that will unlock greater gold participation and significant gold demand. GBI is not only essential for safeguarding the future of the gold investment market, but it also has a critical role to play in helping strengthen responsible supply chains, and in particular, I am referring to artisanal and small-scale mining. ASGM is not a new challenge, will always be with us, and no one, least of all the WGC, is proposing criminalizing or trying to eradicate the practice. But its scale and value have transformed over the last 25 years, from 4% of total gold production at the turn of the century to 20% against a backdrop of gold surging from $250 to almost $3,500 an ounce. The WGC has a dedicated work stream on addressing the many challenges associated with ASGM, which I encourage you to inquire about, as this isn't a topic of today's discussion today. However, I would like to impress upon the audience here that supply chain transparency and the digital tracking of responsible gold from mine to market has a major role to play in differentiating responsibly mined gold from that which is not. I hope that one day GBI will not only underpin a more trusted gold investment market, but will also have contributed to helping solve part of the ASGM challenge by minimizing the value that illegally produced gold has in the market. To return to today's topic on digitalization, I've made it clear that GBI database is the solid and critical foundation stone. But in addition, we've been forging ahead with what I term our 3 digitalization strands, which solve for both accessibility to and fungibility of the gold market. The first strand is an initiative called Wholesale Digital Gold, an initiative born from a 4-year engagement between the Financial Market Standards Board and all banks active in the gold market, which had, as its ambition, the task of making markets more transparent, trusted, and accessible, principally through digitalization. Wholesale Digital Gold is the next generation digitized ecosystem for wholesale financial market participants to trade, hold, and utilize gold as collateral. Initially focusing on the global OTC market, otherwise known as the 400-ounce good delivery bar market, the WGC has brought together many of the major banks from across the gold market to build consensus on the introduction of a digitalized market to complement the existing physical markets. A digital representation of physical gold can streamline and enhance pre- and post-trade processes, presenting an opportunity for market participants, regulators, and stakeholders to collaborate in developing a new digitalized market framework. A distributed ledger could increase operational efficiency, for example, by reducing the volume of individual trades requiring settlement using netting and compression, and can lower operational risks and costs. Furthermore, the use of tokenization, smart contracts, and distributed ledger technology will automate post-trade affirmation, confirmation, and manual settlement processes, reduce reconciliation efforts, and increase the speed and accuracy of trade execution and settlement. Eliminating gold's 5-hour staggered delivery versus payment phenomenon will give much comfort to compliance and risk officers around the world. In this context, and demonstrating noteworthy progress, we hope to achieve the pledging and transmission of digital gold as collateral between a collection of the most major bullion banks by year-end, which will be a hugely significant moment for the gold industry and the bullion banks. The second strand is the introduction of a standard gold unit, or SGU, that we envisage will digitally standardize all shapes, sizes, and purities of gold globally, hence providing such a level of investor transparency and simplicity that the many capital barriers to entry that currently exist to the gold market fall away, attracting many new institutional participants with their vast capital flows. There are a handful of gold tokens in the market today, and many more that have failed. Essentially, these tokens have all been digital islands, adding no value to the mobility and utility of gold as a financial asset. To date, no attempt at the digitalization of gold has addressed the challenging question: how can a truly fungible gold token be created with intrinsic trust, representing the monetary value of gold, whilst addressing the fact that the metal is fragmented across geographies and has different bar weights and purities? Without developing an ecosystem for tokenization that can overcome these challenges, gold will remain a spectator to the evolution of financial markets and retain its position on the sidelines. The SGU is the mechanism by which all gold of known integrity contained within the GBI database can be tokenized, such that the monetary value of the gold can be decoupled from the specific bars in the ecosystem. The SGU tokenization process allows for this by firstly defining the number of digital standard gold units that are contained in a bar of gold, irrespective of its purity, weight, and location. For example, if an SGU represents 1 gram of pure gold, it is straightforward to run a simple algorithm over a 400-ounce 995 purity bar or a 4 nines purity kilo bar and generate the exact number of SGU units or tokens in each, and therefore the monetary value of each bar. In parallel, a separate attributes record is created that notes the purity, weight, and location of the gold bar from which the SGU tokens were generated, but the link between the two has now been successfully broken. This SGU process, for which we have a patent pending, enables all physical gold of trusted integrity to be transformed into fungible digital gold units that can be used to underpin a range of products and services, including tokenization, vaulted gold, collateral, irrespective of the physical bar's attributes and locations. By removing the restrictive nature of today's gold market that inextricably links monetary value to a specific gold bar at all times, we have the potential to unlock vast opportunities for gold as a financial asset in the next generation of tokenized markets. And thirdly, the World Gold Council and the London Bullion Markets Association have joined forces to pursue the reclassification of gold as a level 1 high-quality liquid asset, HQLA, within BAL regulations. In 2013, the European Banking Authority was asked by the European Commission to advise on uniform standard definitions of liquidity assets for the liquidity coverage ratio, or LCR rule. At the time, the European Banking Authority mandate designated gold, amongst other non-central bank eligible but tradable assets, as a potential LCR candidate. However, and somewhat unbelievably, the collection of gold market data didn't begin until late 2018, so the European Banking Authority could not access OTC market data for the assessment. Gold was not included in the final HQLA list and has been burdened with the highest capital penalties ever since. A significant and costly gold market own goal. However, we are now able to present robust and detailed trade data to prudential regulators thanks to the increased transparency and availability of OTC, futures and options, and exchange-traded funds market data. We believe that the use of gold within the prudential regulatory system could be a solution for future adverse financial liquidity events and other forms of systemic risk. It appears clear that most, if not all, central banks think the same, as evidenced by their purchase of in excess of 1,000 tons each over the last 3 years. One of the key characteristics an asset must demonstrate to be considered HQLA is a robust underlying market infrastructure of which gold is lacking. Although the journey to redesignate gold as HQLA through an open consultation at the BCBS will be complex and lengthy, it is imperative that the industry enhances the financial market infrastructure, much of which will be realized through wholesale digital gold and the standard gold unit initiatives. Achieving the objectives of the Gold 247 projects is critical to the future of the gold market and gold's role as a financial asset. The development and implementation, implementation of initiatives like wholesale digital gold and the standard gold unit are pivotal in transforming gold from a passive store of value into an active component of the modern financial system. These projects provide the necessary digital backbone that enables gold to integrate seamlessly into the evolving landscape of unified ledgers and the finternet envisaged by the Bank of International Settlements. The successful execution of Gold 247 project is not merely a matter of technological advancement, but a strategic imperative for securing gold's future opportunity as a vital financial asset. These initiatives will ensure that gold remains relevant and influential in the financial markets of tomorrow, driving innovation and stability for generations to come. Thank you very much for the invitation to speak today.
Thank you so much. Thank you. Do you want to sit down for the questions? I think that's going to be easier if you don't mind. Yeah. So Neil promised me that my mind will be blown, but Neil overestimated my mind. I don't think I understood 90% of this presentation. So let's unpack it, help a dumb miner to understand. So you talk about a concept about making sure that we can track that gold was responsibly mined. So what is responsible and whose definition is it? Is it backward-looking, forward-looking? Just to me sounds like a difficult challenge.
Well, all the World Gold Council members operate under the responsible gold mining principles, which allows for this definition. But my point I would be making is that many of the world's investors need to see a completely joined up supply chain. At the moment, there are still many investors, many asset managers in the world who doubt the fact that there is gold even behind ETFs, let alone that the gold that comes from a refinery from a mine site is making it to a refinery without interruption. And many of them tell stories, and I don't know personally firsthand, they tell stories of hearing differences in recording of gold shipments from carbon paper through to high-power computer links. It's that disparity and the fact that there are those flaws in the system or differences in the system that give the risk managers and the investment managers of the world disquiet, shall you say, and encourage the capital within an operation to be channeled towards such things as FX, credit, rates, etc.
I think I get that part. I'm still a bit stuck. So, well, firstly, we don't really know, or a lot of Americans don't know if there's gold in Fort Knox. But the gold in Fort Knox were mined before these responsible mining rules. So the dilemma is, now you're going to apply rules for the
Retrospective.
mining from here forward.
Yeah.
Most of the world's gold has been mined, and those rules did not apply. So isn't this a bit of tokenism?
Going forward, no.
No, I buy that.
And
Next
my-
year's gold we can do responsibly.
My point is that you are able to grandfather in, for instance, the gold that is sitting in GLD, GLDM, the two ETFs that the World Gold Council owns, $110, $120 billion worth, because it's London good deliverless bars. They will go into the system seamlessly. Now, you're right that if that bar is 30 years old or 50 years old, the standards by which it was mined are different from today's. But I would maintain that there has to be a starting point, an adult conversation, a line in the sand, after which everything will go into the system if you're going to improve it once and for all. And so I've spoken to many central banks and about the willingness, whether they are willing to put their gold into the database and be recognized for having done that. Some are more reticent than others, as you'd imagine, but I see a situation where people will start to understand the positive differentiator of that transparency around the world. This is not just institutions putting their gold in. The idea is to roll it out to such an extent that the Indian authorities end up with one port of entry into India, and any gold that comes in, provided it reaches certain thresholds, and there are questions, but that will go into the system in due course. But there will be a grandfathering moment for all the responsibly sourced gold hitherto. The stuff we accept as responsible, GDL bars as an example.
I think I understand. Now, obviously, I was not aware that this ASM artisanal mining components grown from 4% to 20%. Obviously, the high gold price makes this space full of all sorts of things. It's not all romantic, little people working hard to make an honest living. There are some gangs operating, there's some criminality, there's some people getting rich out of killing other people. This is a huge, difficult space, and it's 20% of new mining?
Estimated.
Yeah, sorry.
This is one of the points of kicking off our ASGM process, is that many of these numbers are vague. But we estimate that 1,000 tons of artisanal gold is produced every single year.
Mostly in Africa, if I can...
350 tons from Africa, 650 from the rest of the world. And you could estimate roughly, you could guess that 50% of it makes its way to bad guys versus good guys, depending on your definition. And one of the things that I've noticed over the last couple of years, that there is an opportunity before us, because the G20 governments, who have previously been focused on ASGM because of domestic problems, are aligned with G7 governments who are suddenly focused on the flow of illicit gold from artisanal mining that have been sponsoring terrorism and wars. And right now, we have an opportunity when all sets of government are focused on this illicit flow for slightly different reasons, and I hope to utilize that. But you're right, it's a blot on the gold landscape. It can be solved. We do have a plan for it. It's relatively simple. It's vast in scale, but relatively simple. And I'm trawling around the world, talking to politicians at a certain level, central banks at another level, and also the industry stakeholders as you talk to them, plus institutions like OECD, UN, ODC, etc., to try and build this groundswell of opinion to get it on the G20, G7 agenda, such that I could start to roll downhill. I think now's the perfect point in history to do something. And I don't think money is actually going to be the issue. I'm trying to galvanize the political will to get it done.
So the next two questions you don't have to answer, but I have to ask them. So we are here at gold's ground zero. This is the city that destroyed the gold market by the Bank of England selling gold in the most irresponsible, stupid way ever. Made the bottom of the market. Are you going to get the Bank of England to buy gold again? This is your ultimate test. These are the people who destroyed the gold market. We are at home.
I have had one conversation in the Bank of England when I took over this role, which was said, if I reform the market to a suitable degree, will you take down that warning to stop buying gold? Because on their website, believe it or not, it says, don't buy gold because it could be a scam.
No, and it may make us look even more stupid.
Yes, exactly.
As well, yeah.
Do I think the Western central banks will buy, as in the developed central banks, will buy more gold over the next year? I think there's a Yes, but probably low amounts. Do I think the developing central banks? Yes, I think they will, for a variety of reasons. One, to a degree, it's unsophisticated. They look at the Western central banks and say, well, the Bank of France seems to know what they're doing, so I'll get my levels, that must be the equivalent level. Many of them regard the reserves they have in the central bank as they do their own investment portfolio. Many of them had dodgy backgrounds with devaluing and revaluing currencies all over the place, and so are far more willing to buy gold and add to that balance within their reserves as a stopgap. But I personally think, notwithstanding all the geopolitical turmoil we've had over the last 3 or 4 months, 6 months, I think the main reason the central banks are buying gold is because they fear a financial event of such a magnitude that they are literally scared. And I think it is the ever-burgeoning debt, sovereign debt, international debt that we are seeing throughout the world. And the reason I think they're scared is because there will come a point, if we get an upward shift in interest rates or that yield curve to such an extent that is not born from economic reasons, that is born from trust reasons, and we saw it, Scott Bessent had to intervene recently to bring it back down, where the interest payments on the cumulative debt become to run away. And you can't stop it. QE won't stop it, QT won't stop it, and you end up in what is essentially a bit of a financial meltdown, to say the very least. And so, do I think they're going to continue buying for that reason until they can feel they've got a hedge in their portfolios? Yes, I do.
Even when I was trying to convince people to buy gold and gold shares, I always wondered about this. And when the world comes to an end, and you've got your 3% of your portfolio in gold, what the hell do you do with that gold now? So I'm still struggling with this hold gold for the calamity, calamitous event. But I do own some gold, so let me not sound too cynical. This last question you really don't have to answer. It comes from Anonymous. Why did they pick a banker for the World Gold Council rather than a miner? I think the answer is obvious, but perhaps you want to answer it. I asked Neil.
I was specifically, I think, and I understand that the objective, when they were searching for a new CEO, they were looking for someone who might be able to unpick the institutional world such that they would invest in gold. And I had, in my previous incarnation, been the lucky guy trying to make profits out of an ever-dwindling pool of capital at Credit Suisse, which obviously broke up in front of your eyes. And I had to kill that business first, out of all of them. And the reason I had to kill that business was because the world viewed it, as I said in the speech, as old, clunky, expensive, and a ludicrously bad use of capital. So I picked that capital up, fired everybody, closed it down, and handed that capital to the guys who trade, at the time, US dollar swaps, which the capital usage is tiny. So the return on capital, liquidity adjusted, is remarkable compared to gold. And so when I told I think it was David Harquell, who interviewed me at the time, when I told him that story, I think I saw a bit of a light bulb come on above his head, when I might have an insight into what was necessary to be done to the gold market and the asset and its market, such that institutions will come a-running. And I think we're doing a pretty good job.
I'm not sure, but this to me sounds like the analogy of asking the Pope to run a casino now. I mean, but good luck. Fantastic presentation. Thank you very much, and thank you for joining us.
It's a pleasure.
Thank you.
Nice to meet you.